All right, what is going on, everyone? Hope you guys are all doing well. It has been a minute since I've created a YouTube on video, a video on YouTube. So much has happened since the last video. I'm pretty sure the last video was when I was living in Canary Wharf. That's when I moved into my one-bedroom studio. And now I'm in Dubai. I relocated in Dubai back in January. So it's almost been 7 months now since I've made the move to Dubai. And don't worry guys, a video tour around my apartment will happen. Day in the life videos will come. A lot of videos are going to come in the future. I'm not going to promise consistent uploads because I don't know when I'll be recording and uploading them because I've been caught up with a lot of work. But these videos will come. You guys will see the day in the lives here in Dubai. You guys will see my apartment tour. This is currently my room right now in Dubai. Let me show you guys the setup. I'm going to do an educative video on a question I get asked quite frequently. Now, this video is simply going to be about what entry model I use to enter my trades aggressively without needing to wait for a confirmation entry. All right. So this is the exact entry model I always use when going in aggressive. And that's what I'll be sharing with you guys today. All right. So hope you guys enjoyed this quick and informative video. Please do note this shit down. This is stuff that should be my course curriculum. I'm going to give it out for free because you guys already know in ZM Capitals, we only share gems. All right, now let's get straight into the video. So I have it all drawn out over here for you guys. This is exactly the entry model that I wait for price to form when going in aggressive on the higher time frame. I don't even need lower time frame confirmation to trade this exact entry model. Cool. So I'm going to show you guys this example. Then of course, I'm going to show you guys live examples of trades that I've taken and trades that I'm going to take that has formed this exact entry model. Cool. So let's get started over here. This was the previous high, right? Price formed a lower high and then broke this structure over here. This is the first thing that we need to see happen. So price must take out liquidity from any early sellers in the market from this structure over here. Once price sweeps that structure, we wait for it to break the low that formed this high. So this was the low that formed this high. This is the point where we need price to break to confirm the move over to the downside. Now that price has broken straight through that low, which formed that structure, that will be our valid change of character. Okay? Now, once you've identified these two things, that's when we identify our area of supply. Our most premium area of supply being this point over here. But that is not it. With just a break of the previous high and a break of the low to confirm the move over to the downside, that does not confirm the trade for us to go in aggressive. Something else has to happen beforehand. And that is price must engineer liquidity below our area of supply or below our POI, or in a buy scenario above our area of demand. Okay, but let's just stick to the sell scenario right here. So price takes out the structure, then it takes out the low. This confirms the change in sentiment, all right? But that does not confirm that we can get in aggressively just yet. Once price begins to pull back, we would like it to form some areas of liquidity, okay? Would like it to engineer some form of equal highs, trend line liquidity. In a buy scenario, it could be double bottoms, okay? It could be a bullish trend line. It could be the Asian range. Okay, any form of liquidity that is engineered below our POI is what allows us to go in aggressively off of our area. So in this scenario over here, price engineers these double tops, which it then later takes out. All right, this then fuels the move. Price then mitigates into our premium, and then this is when we aggressively sell off our zone into some lower levels. All right. So these are the confluences that we need, and this is the exact entry model that I always look for when going in aggressive off of my trades. 1, price must take out previous structure. 2, it must take out the low that formed the high. This confirms the change in sentiment. Then we must identify our most premium area of supply. On the pullback, price must engineer liquidity below our zone. As you guys can see, the liquidity was engineered right over here. Then once price takes out the liquidity that was engineered and we get that mitigation into our area of supply, we will get an aggressively. And this is the last point. We will only enter aggressive off of our zone if price mitigates within the London or the New York session. If price ends up liquidating the liquidity above our zone, but then mitigates during the Asian session, we will not be entering that trade. Only during the London and the New York session must we look to get an aggressive on a position. Okay, so price pulls, takes out the liquidity, taps into our higher time frame area of supply during the London or New York, then we'll get an aggressive with 1% risk and short straight off of that level without needing any further confirmation off of that zone. Cool. So that is the entry model I use. Now let's look at live charts and live examples of trades that I've taken and currently in. You get the point. All right, let's get into Euro Yen. So this is a trade I'm still in. I'm holding this over the weekend. Right now is, for you guys that are watching today, is Saturday. So this was a trade that was taken yesterday. Very, very, very clean. And let me show you how the market is so fractal, okay? Because the same entry model happens again and again. So let's focus on this price action right over here. This was the previous high. Price takes out the high and then takes out the low, which formed this high. That was our change in sentiment. Price engineered liquidity below our level of supply, right? Now, if we just ignore this price action for a second, what do we notice happen? Price pulls back, takes out the liquidity that was engineered, mitigates into this area of supply, and then we could have gone at this point, and then price sells off. But I was monitoring price at this point over here. I didn't see this price action, okay? So this would have been an entry number one with the same exact entry model. Now let's focus on this price action right over here. Same exact thing again. Price takes out this structure, as you guys can see. Price takes out the high and then takes out the low, which formed that high. That was our change in sentiment. Cool? Now that price had broken that low, we then mark out our area of supply. This was taken off the 4 hour. If we even fill up the high to the low, you can see the zone aligns very nicely with our 70.5%. Cool? So that was the reason behind this trade. So one, price took out the structure. Two, it broke the low that formed the high. That was our confirmation for the change in sentiment. Price had liquidity engineered right over here. As you guys can see, price took out any early sellers that was within that price range. That high was taken out. Then we got a true mitigation into our area of supply. That is when I got in aggressively and shorted it over to the downside. Price is still running right now for a 1 to 2. I'll show you guys the trade that I'm in right now. It's currently the weekend, so the markets are closed, but I'm still holding this trade. Let me get my face out of it so it focuses on the phone. I'm currently in the trade right about now. Cool. So that's the trade that was taken on the Euro Yen. Same exact entry model that was broken down earlier. And as you can see, it happened twice. It happened within that price range and it happened within this price range. Cool. Now, let's move on to USD CAD. Now, USD CAD is a trade that I took also last week. Very, very clean. This was taken off of the 15 minutes. But I'll show you guys why I got taken out of break even. Now, if I didn't manage the trade so poorly, I would have actually came out at a 1 to 10. I'll show you guys the entry now. Anyways, back to the breakdown. I'm going to show you guys how amazing the entry was, but how poorly it was managed. That's why we ended up getting stopped out of break even. But anyways, let me get into this breakdown. So if we just replay price quickly, back to this point right over here, and we just zoom in. Just 5 minutes. So it's a lot clearer for you guys to see. There we go. Now let's get rid of this. Let's get rid of that. Cool. Now let's just zoom in. Okay. What can we see? This was the last structure. Price took out that structure. Number one. Number two, we wait for price to break the low that formed that high. So this was the low that formed this high. Okay. We waited for price to break it. Once price took out that low, that was our confirmation for the change in sentiment. Cool? We're still on number 2. Once you get that confirmation and change of sentiment, then we identify our most premium areas of supply. And that was the most premium unmitigated level. Price engineered some liquidity below our area of supply. As you guys can see, this structure was right there. Price then pulls back, takes out that structure, and then mitigates into our premium area of supply. This mitigation happened during the New York session. Cool? So now, those are the confluences for me to take this trade aggressive. That's when we got in. I had my stops at this high right over here, just to give the trade some breathing room. And then as for TP, I was targeting this area down over here because we had that inefficiency and some unmitigated areas of demand. So my TP was all the way down over here. Cool? And as you guys can see, the trade was running very, very nicely. And this is why the trade was managed so poorly, because I let the trade run for a very nice 1 to 9, and I didn't even consider partialing out or at least closing my position. This would have been a TP1, and it should have been a TP1 because we had the Asian lows at that point, so we can anticipate price to take out the Asian lows and then continue over to the upside. But unfortunately, I tried to max out the trade and I wanted it to come down into this imbalance, which it eventually did. Now, if I just play price, you guys can actually see it happen. Let me just take off replay now so you guys can see it all. So price ended up coming into that Asian low that I was talking about. And as you guys can see, ended up taking out our position at break even. So we got stopped out. And then it eventually came into my actual TP at that demand I was talking about. And then, of course, I had that reaction because this would have been a valid point to buy up from because of that break of this high. So this would have been a very nice discounted area. But anyways, you guys can see my point. Entry was fire. It was just poorly managed. But if it was managed correctly, this would have been a profitable position. Nonetheless, we learned through the process. I just want to show you guys the entry model to understand how I got in. Cool? That's number 2. Number 3, the Australian yen. This was a trade I was monitoring but didn't get in because I got into the euro yen trade instead. Cool. That's why let's just say I have the same bias on similar pairs like the euro yen, the pound yen, the Australian dollar against the yen. I pick one only. I don't trade both of them at the same time because that's just doubling my risk. Cool. So now we're going to go to the 4 hour on this trade, and I'll show you guys how it's the same exact entry model again and again. Okay, so this is exactly what I was looking at. Price took out this structure, as you guys can see. Then we waited for it to break the low that formed that high. Let's break down to the 1 hour. Okay, so price took out this structure, as you guys can see. Then we waited for it to break the low that formed the high, which was right over here. That was the confirmation for the change in sentiment. Price then melts, engineers this liquidity below our area of supply. As you guys can see, we've got that structure right over here. Price ends up pulling back, takes out that structure, and truly mitigates into a higher time frame area of supply. That's when I would have gotten aggressively off of this point of my stops at the high, and I would have shorted it down, catching this entire move. But because, like I was saying, I entered the euro yen trade, I did not get into this position. But this would have been a scenario to get in on aggressively. And can you guys see the pattern? The entry model working again and again and again. Now, this is a trade that I'm looking at, for example, for next week with the same exact confluences and entry model. Price had reacted up a higher time frame area of supply, but that's not what we're focused on. What we're focused on is on the confluences behind this entry model. Price takes out the liquidity. Price takes out this structure. That's number 1. Price then breaks the low that formed that high. That confirms our change in sentiment. Price also engineers liquidity below our area of supply, which is another confluence. And then we identified our premium area of supply right here with all of this inefficiency and is resting within a very nice premium. So now when price pulls back, takes out this level of liquidity, I will get in this trade aggressively with my stops at the top wick. And I'll be looking to target some of the lower levels, okay? Potentially even the last low. Cool. So same exact confluences. Price takes out the structure, then it takes out the low that formed the high. That confirms our change in sentiment. Price then engineers liquidity below our area of supply. We then wait for a pullback, to take out the liquidity, get into the premium. Then we get in aggressively, no need for a confirmation, as long as price mitigates during the London and the New York session. That's the main thing. Once price gets that mitigation into this point, we get in aggressively and short it. And this was the trade that I took on Friday. Okay, same exact entry model, but I got stopped out. Now let's see why. Okay, price reacted off this higher time frame area of supply. Let's head down to the 30-minute and show you guys exactly what had happened. Now, this trade played out very nicely. Okay, we were in profit, but then it ended up coming back and hitting our stop loss because it was during news release. Okay, now I know NFP usually affects the dollar, but as soon as NFP happened, which was what at this point right over here, let's break down to the 15 so you guys can see it properly. So, 1, price took out this structure. 2, it then breaks. So 1, price takes out that structure. 2, we wait for it to take out the low that formed the high. This was the low. Price then impulsed over to the downside, taking out this low. That confirmed the change in sentiment. We had this structure over here that was formed below our POI. We waited for price to take out that structure and truly mitigate into our premium level of supply. That's when we got in aggressively and price was moving very, very nice. And then at this point right over here was NFP release. As you guys can see, it was exactly around 1:30. Okay, 1:30 was during NFP release. And then this is when all of this happened. So as you guys can see, that was exactly, if it stops moving, 1:30 p.m. as you guys can see, yeah? So as soon as NFP released, that's when price started to spike and it eventually came into our stop loss. So this trade was affected by news. Other than that, it was running very nice. And unfortunately, pardon me, I did not move the trade to break even because I was out at the time. But if I followed my rules, as soon as price broke this low, as you guys can see by this wick, I should have chose my stop loss to break even. And this trade would have been running risk-free and it wouldn't have hit my stop loss, but unfortunately did. And I'll put the trade right over here. You guys can see it hit stop loss. Cool. So I showed you guys examples of profitable trades that was taken using it. I showed you guys examples of trades that I'm going to take using this entry model. I showed you guys an example of using this entry model, it running nicely and then coming back to break even. And yeah, so as you guys can see, this is an entry model that works. It is the exact model that I use to enter trades aggressively without needing further confirmation. All right, guys, hope you guys found this video informative and educational. If you loved the video, please drop a like, drop a comment, and drop a follow on my Instagram, where I'll be sharing a lot more educational content, plus motivational videos for you guys at ZM Capitals. All right, and by the way, guys, I've officially got the blue tick on both my personal Zain Mokhlas _ and the ZM Capitals Instagram page. They both are now verified with the blue checks. So please be careful from any scams. Be careful from all the fake accounts that are trying to pretend to be me and sell you guys services that I don't even offer. Cool. So that is about it. Hope you guys enjoyed this quick video. And I know it's been a while since I've been back here on YouTube, but I thought I'd come here and share some gems. All right, guys, enjoy the rest of your day and take care. See you.